Well, CME 10-year futures have a bid and have had a bid all day, despite a risk-on rally in stocks and despite a flattish dollar. That said, implied yields, the high was 2.86, the low yield 2.825. 5-day performance, 10-year treasuries yields are down 195 basis points. On a 1-month basis, 10-year treasury yields down a stunning 23 basis points. Beyond that, we had some really positive economic data from the housing front. We had both starts and permits. Both beat expectations and actually beat expectations by quite a bit. However, the bid in treasuries happened and was well entrenched before the data. Other words, the economic housing data didn't really affect the market for more than perhaps 1 minute. And that is really because tomorrow's FOMC is what traders are waiting for. The market's volume has been very light because of that. And I think when it comes to 10-year traders, a lot more concerned with any sort of language change coming from the FOMC rather than raising rates on the front end of the curve, which seems to be fairly entrenched with a 70% probability. But inflation expectations, will Powell change that, given the fact that 10-year tips, Treasury inflation-protected securities, are implying a 1.5% inflation rate for the next 10 years. So traders are wondering what's going to happen next because the yields are far different than the reality of what the FOMC talked about in September. Also, with balance sheet runoff, a lot of things that are in the works, a lot of things at stake for 10-year. Right now, very slow, very pensive, people squaring positions and just waiting for the results tomorrow.